All right, welcome to The Explainer. Today, we are diving into something huge. One of the biggest names in Web3, Animoca Brands, is making a play for Nasdaq. But here's the twist. They're not doing a typical IPO. Nope, they're using a really clever shortcut that could completely change the game for how crypto companies get onto Wall Street. So, listen to the language here from the company's chairman, Yat Siu. He's not just talking about another stock listing. When you hear phrases like usher in a new asset class, that is a massive signal. He's framing this as a truly historic moment, not just for his company, but for the entire digital economy. Okay, so to really wrap our heads around this, here's what we're going to cover. We'll look at the deal itself, dig into why they're taking this specific route, break down how it all works, check out the fine print, and most importantly, talk about what this could mean for the future of Web3. All right, first things first. What is the actual news here? Let's get to the core of the announcement. So the headline is this. Animoca Brands, which is this absolute powerhouse investor in over 600 Web3 projects, we're talking giants like the Sandbox and OpenSea, has signed a preliminary deal to merge with a company that's already trading on the Nasdaq called Currents Group. And get this, we are not talking about a small-time deal. The whole thing values the new combined company at around $2.4 billion. That is a serious number that makes Wall Street sit up and pay attention. And this chart right here tells you everything you need to know about who's really in charge. Animoca's own shareholders will control a whopping 95% of the new company. Currency shareholders, just 5%. So it's crystal clear. This merger is simply a vehicle for Animoca to get its name on the Nasdaq. Now, this brings up a pretty obvious question, right? Why go through all this trouble? Why not just do a normal, traditional IPO like most other big companies? Well, this move, this reverse merger, it's not some random choice. It's a very calculated, strategic play that offers some pretty significant advantages over that old traditional route to going public. Think of it like this. A traditional IPO is the long, scenic route. It can take more than a year, and you're completely at the mercy of a shaky stock market. A reverse merger, though, that's the express lane. It can be done in a matter of weeks. You're less worried about market timing, and it neatly separates the process of going public from the process of raising new cash. So, how does this financial shortcut actually work? Let's quickly pull back the curtain and demystify the mechanics. It's actually pretty clever. At its core, it's pretty much what it sounds like. A private company, in this case Animoca, comes in and essentially takes over a company that's already listed on a stock exchange, like Current Group. Now, the public company in these deals is often what's known as a shell company. It's got the public listing, it's got the regulatory framework, but there's not much business going on inside. You can think of it as an empty, pre-approved car that's already registered and street legal. Animoca just needs to drop its engine in, and it's ready to hit the road. So, it really boils down to a three-step dance. First, find a suitable public shell. Second, swap shares so the private company's owners are now in control of the public one. And third, just like that, the private business is now a public traded company. Simple as that. Okay, so now that we know how these reverse mergers work in theory, let's zoom in on the specifics. What exactly is in the agreement between Animoca and Current Spire? The most important thing to remember here is that this is non-binding. That means nothing is set in stone yet. The plan is for Currents to technically acquire Animoca, paying for it with new stock, but the entire deal depends on everything checking out, getting the green light from regulators, and shareholders voting yes. And hey, don't expect to see Animoca on the Nasdaq ticker tomorrow. This is a marathon, not a sprint. The announcement was just the starting gun. They'll spend 2026 working out all the details, with the hope of crossing the finish line by the end of that year. So now we get to the really big question. We've talked about the mechanics, but why should you care? What does this corporate deal actually mean for the rest of us in the world of Web3 and digital assets? Well, this move is so much more than just financial news. It's a powerful signal that the Web3 space is growing up, and it's actively building a sturdy bridge to the traditional world of finance. Think about it. If this happens, a Nasdaq listing gives Web3 this incredible stamp of legitimacy in the eyes of big, institutional investors. It creates a playbook for other crypto companies to follow. And, of course, you better believe it, it could fire up new interest in tokens inside Animoca's universe, like Sand and ApeCoin. This is about creating a major, publicly traded Web3 conglomerate right on the US exchange. And this quote from Yat Siu really nails it.
The ultimate vision here is to create a single, easy-to-access investment, one stock that lets anyone on Nasdaq get direct exposure to the whole digital economy. We're talking DeFi, AI, NFTs, gaming, the whole shebang.
So, the biggest takeaway is this. A successful listing for Animoca wouldn't just be a win for them. It could be a true landmark event for the entire industry, blurring the lines between Wall Street and Web3 for good. The big question now isn't just what happens next, but who's going to be brave enough to follow their